The Fed is about to cut rates this week, and Wall Street is betting big on it. But here's the catch. Inflation is still running high at 3.1%, and tariffs could push prices even higher. And that means the average household in America could lose between $2,400 and $2,500 this year alone. So what happens when rates fall in a world where inflation hasn't gone away? It creates winners and losers. Mega cap stocks with strong balance sheets, with pricing power, with strong networks, they can endure that growth. And small caps, companies that are small, they have heavy debt because they need that debt to fuel them. And then finally, they get a lifeline to grow again. So in this video, what I'm gonna do is I'm gonna reveal 4 stocks, 2 mega caps, 2 growth stocks that are positioned to win when the Fed cuts rates. But more importantly, I'll show you why their success is not a fluke. The bigger part of the story is where markets are headed. So let's dive into that, man. Before we get into that, man, I want you to do something for me, if you don't mind. I want you to like, I want you to subscribe, and I want you to share this video, man. Let's help us get this up to 1,000 likes, man, because that's truly, truly, truly how this channel grows. It's your boy, the Wall Street Trapper, man, and y'all know my goal is to help y'all build wealth one share at a time. All right, let's go, y'all. So why rates matter? Let's just dig into that for a second, right? Well, here's why they matter. For your money, I want you to understand something. When the Fed cuts rates, borrowing gets cheaper. Now, companies can carry that debt, especially the smaller ones. But suddenly, they have no room to grow. And when rates are high, it gets really expensive. But then when the Fed cuts rates, those small cap companies, well, they can explode. And the reason why they can explode is because now the rate cap is off. Because now they can borrow money at a cheaper rate, and the money that they already have that they're borrowing gets cheaper. So they have room to breathe. And so they're betting that they can grow while rates are getting cheaper because they can borrow more money. And their goal is to keep pushing revenue, use the profits from the growth, and then pay that debt down. So the dope part about a small company is what they get to do is they get to bet on the future, not the right now. And Wall Street actually rewards them. They say, hey, it's okay that you have debt. It's okay because we are betting on the growth. So Wall Street starts to ask them is, when will you be profitable? And they can say in 5 years. They can say in 10 years based on these things. And Wall Street will oblige them because Wall Street is a forward-looking mechanism. It bases the valuations not on what things are right now. They base it on the future. This is why Warren Buffett was so amazing as an investor, because he learned if I can understand what a company is worth now and then predict what it can do in the next 5 to 10 years, then that will get me ahead of the curve because I can know whether this company is truly cheap based on the value, which is called a discounted cash flow value. I can know if this company is cheap based on the value that it has right now. So I want you to understand something. Hear me well. Inflation is still above the Fed's target rate, which means companies with pricing power and big fortress balance sheets like mega cap companies, they're going to dominate. So the smartest strategy, own both. And these 4 stocks that we're going to cover, man, I think they fit the bill really nice, y'all. I'm not going to lie. First on the list is none other than Arista Networks. You know them. ANET. ANET. Now listen, this company is like the hidden nerve of the AI, right? So every second, billions of data packets move between servers and data centers and clouds. Well, who controls that traffic? ANET. They build the switches and the software that keeps the AI, the cloud, and the internet companies running at light speed. Now, I want you to understand something. The company has $3.8 billion in cash, no debt. Let me say that again, no debt.
Whoop-de-doo.
Their margins are over 60%. They consistently print double-digit revenue growth. Listen to this. So while rates help other companies, here's what it would do for ANET. lower borrowing costs. So now you get companies like Meta, Microsoft, Google, they get to expand their data centers faster. Now, that's more contracts for ANET. So the future vision is the AI boom, cloud computing, roboting, all need faster, more reliable highways, data highways. And ANET is not just important, they become indispensable. But the hardware, and that's just half the story. What about the company that's designing the tech that makes the data move faster and cheaper in those systems? Before I get to that next stock, I gotta help you understand this. ANET is up 26% year to date. Now, the company did take a hard fall back in February, but it has truly bounced back. They even did a stock split. So you definitely should have ANET on your list and be prepared to get some before the Fed cut rates. Now, I want you to understand something. When it comes to this company, the GPUs, the networking, this is where they win at. That Ethernet gear that connects the AI, the data centers, they don't just want power, they making sure they going to the next level. Now watch me here. The company has $26 billion in cash, triple-digit revenue growth, gross margins over 70%. Let's even dig a little deeper into that. We understand that the market is not rewarding NVIDIA like they was, right? We get it. We understand it. Listen, they're up 30% year to date. That is amazing. It can easily be up 60%. But here's the thing. Back in February, the company went down to $83. What did we say? I came in. I said to everybody, yo, we need to be owning NVIDIA at $83. Right? Here it is. The company's right at 170. This can easily be a $200 stock by the end of the year. I personally think it'll be a $200 stock by end of year, especially with these rate cuts, y'all. Think about this. Amazon has 1 million robots in, but these robots just lift. They do shells and they do package scanning. What NVIDIA is trying to do now is they're trying to say, yo, we want to become the brains of the next iteration of robots, the ones that run, the ones that jump. I wrote something down, right? Watch this. The robots that make decisions, the robots that pick up things with their hands, the robots that become your personal assistants, the robots that help you do all. NVIDIA wants to become the brain of those. NVIDIA wants to even be the brain inside of drones, y'all. This is not a company that's set up for failure. This is a company that's set up for massive success. And when I say massive, I mean massive. I wrote something down. NVIDIA has $7.3 billion in revenue just from the networks alone. That's the Ethernet. Listen to me. Companies like Amazon, companies like Google have already said, yo, we signing up for that. That means NVIDIA now is positioning themselves to the next level because we see what the market is doing. Okay, China, they're having issues with China because China's saying, yo, we don't want to buy those chips. Guess what NVIDIA said? Cool, we're going to go over here and do it. Now, here's the thing. We know China is good, but nothing is like those NVIDIA chips, y'all. Nothing. Watch this. Robotics is expected to grow by 20.7% by 2030 and become a $1 trillion industry. I won't put this back in your face. The company is up 30% year to date. This can be a $200 stock by the end of the year. I want you to understand something, family. We don't got time to play. So how does rate cuts help NVIDIA? Easy. Companies like Meta, Amazon, Microsoft, and other companies that want to scale faster, guess what they do? Low cost of capital, guess what they're going to buy? More NVIDIA chips. We saw all the NVIDIA chips that Meta bought. We saw all the NVIDIA chips that Amazon bought. And guess what they said? We're going to buy more. But here's the thing. The tech stack that NVIDIA has, from chips to cables to network, they want to own the whole AI infrastructure. So if NVIDIA is the king, who's rewriting the rules for money? In a low rate environment. This is where the story gets real interesting. And I want y'all to rock with me on this one. Now listen, this one here gonna catch y'all off guard. Now listen, this one is the challenger of the banks. That's right. Known for student loans, known for transferring mortgages, they have now transformed into a full digital bank, lending, investing, credit cards, and more. This is the millennial and Gen Z version of JP Morgan, none other than SoFi Technologies. Let's go, man. Let's go, man. Now, I want you to understand something. They not just competing. Mm-mm. They not just competing. Mm-mm. What they doing? They're building a new kind of financial system. That's right. With $3.5 billion in cash, with revenue growth of 37%. I want you to understand something. With 8.1 million customers and climbing, this company is truly positioned to change the game. Now, I'm not gonna lie. I thought it was gonna be PayPal. Now, I said fintech, 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 fintech. I thought it was gonna be PayPal. But SoFi is truly changing the game, y'all, in the way, we don't trust the banks. Let's just be for real. Nobody trusts the banks no more. We understand everything that the JP Morgans and all these other banks are doing, and we don't trust them. But the new generation, the millennials, the Gen Zs, they saying these are the crypto investors that's heavy. These are the people that are crypto enthusiasts, technology enthusiasts. This is the new way of banking. This is why I told somebody that Robinhood is 100%. It's not that I like Robinhood. I don't think the financials are good. I don't like the way it's set up. But the new generation of people don't care. They don't trust the old guard. And that's what SoFi represents. SoFi represents the new guard, people. When borrowing costs fall, lending booms. More mortgages, more personal loans, more activity across the board. And SoFi, well, they positioned. They positioned to capture that digitally faster than the legacy banks, which puts them in position. The younger demographic, they're gonna go digital first. They understand that SoFi, they're not just benefiting from the rate cut. They setting themselves up to dominate the next generation. SoFi thrives when the money gets cheap. This one here is one that I truly want us to pay attention to, right? It is 100% locked in. Listen, the company is Credo. Ticker symbol CRED. Now think about this. This isn't a household name when it comes to companies, right? But it's powerful, and it's so powerful that it's powering some of the biggest names in the world. It's powering Amazon. It's powering Microsoft. Elon Musk even using it with XAI. But you're going to ask yourself, what do they do? Trap, why I don't know about them? Well, think about this. They design the chips that make data transfer faster, cheaper, and more energy efficient. That's right. So you know one thing when it comes to AI, right? When you think about AI, you know one thing. Speed, data, and how that's moving back and forward, right? From one phone to you, and you know all the energy that we use when it comes to AI, that's one of the biggest issues. Well, this company not only creates the chips for it, the optical chips for it, they also have the inner workings and the connectors that make this thing possible. So that's truly, truly, truly what makes them so special. But also, I want you to think about something like this. They're a small cap company, and I'm gonna get into something even more. They don't have no debt, none. That is so unusual for a company of this size and this magnitude, this stature. So that means with a rate cut in place, they can scale as much as they want at a faster rate than everybody else. Which truly, I may see them getting acquired one day. The company last quarter, their sales and revenue jumped over 274% year over year. Watch this. Last quarter, they reported 190 million. That's what they forecasted, 190 million. But guess what? They reported $230 million, y'all. And the CEO, he's calling for another 120% growth. Wow. Now, as we go a little further, watch this. Their optical chip business is expected to double by 2026. That's only a few months from now. It's expected to double. Now, I want you to ask yourself this question. How does rates help this? Well, as a small cap company, they may say, you know what? We can borrow more money for research and development at a really cheap price, and we can scale to get more contracts. Now listen, investors return to high growth always happens when rates get cut. Now, here's the vision. Every AI data center just need energy costs to come down. Well, Credo's technology is essential because they bring the cost down and they do it faster. So while Credo is riding growth, I just want you to understand, there's other companies that are going to truly be dependent on this small company. We can truly see this company explode, not just now, but over the next couple years. This can be one of those AI trades that we look back on and say, whoa, this was one of them ones that we should have been in. Think about it. The stock is up 100. Let me just show y'all right quick. The stock is up 135% year to date. $92 this year alone and growing. It won't stop. It's truly a sleeper, and I need us to get in on it. I do not need us to let this one fall by the wayside. So before the Fed cuts rates, this is one of the ones that I think we truly should be looking at. But what happens when all four of these, Arista, Credo, Nvidia, and SoFi, align in the post-rate cutting world where money is cheap and it's getting cheaper? This is where the real opportunities lie, y'all. So here's what's at play, y'all. Arista keeps the data moving. Credo makes it faster and cheaper. Nvidia supplies everything in the stack that's coming, and SoFi moves the money. Four companies, four different angles, all positioned to win when the Fed cut rates. So this is why this week matters. A rate cut doesn't just mean cheaper borrowing. It reshapes the market, fuels growth, and can spark the actual next bull run where we all make money. But the real question is, which of these four stocks do you believe has the most upside? Drop that in below so we can see how you think. It's your boy, the Wall Street Trapper. I just want to help you build money, turn your last name into an asset. Make sure you like, make sure you subscribe, share this, and tell us in the chat which one you think. Salute.